Morning everyone, Paul here from Gamma Edge. Today is Friday, the 23rd of September. Let's get started. Pause your players here, please. Read to the bottom. If you agree, hit that play button. The overall summary for today, all our signals are in short or cash paper trades. Of course, nothing here is a recommendation to buy or sell any security. The CT model, which is our primary market model, is what we call railroad track down. You'll see that on the next slide. This being said, we are watching for crossing of the moving averages from below, indicating a reversal signal. There are some things that are pointing that we could potentially move higher, if not today, perhaps middle of next week. As posted in the Discord this morning, there are indications of call buying going on for the near term, likely in preparation of the JPM hedge. We'll talk a little bit more about that here in a moment. I would suggest everyone go review the charts that I posted this morning. GEX ratios are nearing what we typically look at as being opportunistic for the long side, so I would suggest that you paper trade progressive exposure in those areas and maybe time that with the market model. We think we can still go lower, but we think the JPM short calls at 4,005 and the long puts that are at 3,580 are causing a bit of concern, kind of a tug of war between the two right now. Nevertheless, we are watching Delta collapse day over day. We're a week away from having it collapse to zero, and that is going to be a big deal come the JPM day. Typically, they put on about 11 billion in real Delta, and the market will have to absorb that. So it's going to be interesting to see how that occurs. As I said, the market model via the cumulative tick is on a full down. Put some bubbles in here about different ways that you can use this to kind of confirm. I would pause your player, read through these, make sure you understand them. If you have any questions, come into the Discord and ask questions. For those of you who have not been watching the JPM trades, we are coming up on this time next week where we have 46,700 contracts at these three strikes each that are going to roll. When those things roll, they will roll out to the December time frame. This is part of a monthly cycle. This is the biggest one, and this is having a material impact on the structure that we're experiencing right now. When we take a look at just this next Friday's expiry, so this is our market model, but with just the JPM for next week, you can see the blue line, which is the terminal value for Delta, collapses to zero. So we are sitting right here right now, and if we stay between these two ranges, 4,005 here, you can see that deltas will go from the gray to the green to the red to the blue. Now that's important because the dealers who are on the other side of the trade are coming down this way. They're on these positive deltas right now, and they're getting shorter and shorter. That could cause us to have a drift upward. We'll see. You can see the different dates here and how they correspond to the colors. So this is delta. When we take a look at gamma, the natural place to hide where gamma exposure collapses to zero at the terminal value is very, very close to 3,800. This suggests, if we had no other market out there, that this would be a great hiding place, that deltas would be constant at that point. And that's because a line tangent right here is going to be flat. Why does that matter? Because that means price can move around and gamma exposure doesn't change. But we know that there are a lot of other trades out there, and so it doesn't look exactly like this. That being said, 3,800 is a safe zone into next week, and we would expect some push towards that and maybe pinning in this area. We don't expect going all the way up here to this high side of 4,005, but of course your crystal ball is as good as ours. Taking a look at the levels here, what's important is that you can see COI, POI sitting here at 4,000. We've got 4,300, which remains one of the goalposts. The other goalpost has slipped down to 3,700 from 3,800. We think that is material. Want to pay attention to that. So at 3,757, we actually have a considerable amount of negative GEX or negative gamma sitting down there. So this is what we call, when we say negative gamma, just to be clear here, we're watching for a put gamma. And so we're just completely dominated by put gamma all the way on down. When we take a look at the 0 DTE, this 3800, 3805, 3810 area is going to be a key level. This is the 0 DTE. Very significant amount of expiry today. If we see any monetization in this and the other like index ETFs like SPY, Qs, and IWM, we could get a push upward. So be aware of that potential for monetization. And that closing of puts and opening of calls will be a fairly significant reaction because we have a large amount of puts that are sitting down here. When we take a look at where do we end up for Monday, so where are we projecting if nothing else changed in the structure, what does Monday look like? We like to look at this because we typically will think about where we're going to start Monday morning, and you can see it's about the same area. And so we are favoring this 3,800 to 3,810 area, somewhere in that zone, plus or minus. Give yourself a little bit of width there, but we think it's going to be in that zone. The combo here, a lot of large gamma levels that are sitting here. Remember, of course, that the red is indicative of dominant put gamma, and red here in the deltas is dominant of that put gamma, or excuse me, put delta also having a major influence. Key levels 38, 3750, 37. No surprises there. Very dominated, very heavy in the put side of the equation. Just want everyone to pay attention to that. So we think, big picture, we're sitting here. We're going to watch for a closing in this range today. That'll carry us into the starting conditions into Monday. It would make sense. We could actually push higher. We'll just have to wait and see. So that's it for today. If you have any questions, comments, suggestions for improvement, or just general feedback, come and join us at gammaedge.us. That'll take you to a blank web sign-up page. Yes, we know it's blank. We are revamping our website. Click on the pricing tab, fill out the Discord sign-up page, come into the Discord. We have a lot of tools to visualize this stuff. A lot of great traders, all experience levels, all their paper portfolios of very different sizes. So I would urge everyone to come in and kick the tires. 14-day free trial, no risk to you. Follow us on Twitter, Gamma Edges with an S, and then on YouTube, of course. If you like today's content, let me know by smashing that like button, and that gets immediate feedback to me. And then, of course, follow us because Taylor's posting materials, Michael's posting materials, and, of course, I am. So hope to see you in the Discord. Make it a great Friday. Make it a great weekend. We will have open mic on Sunday night. It'll be here on YouTube, and so follow us on Twitter to get that information. Thanks, everyone. Take care.